Okay, hello everybody. Welcome to Crane Atlanta Mentorship. And in this video, we're just going to do another velocity banking review. So, what is velocity banking? All it is a debt payoff strategy where you throw all of your money into debt with the help of something called a line of credit. And one of the things that I want to talk about before we start this review is throughout the past couple of years, I've been very fascinated with these news stories about people living like paycheck to paycheck and they're earning six figures. Because once upon a time, I used to make 20,000 a year, and I was like, "Well, if I made six figures, I wouldn't be broke." And then you can see right here, more families making over $150,000 are living paycheck to paycheck, and there's two main reasons for this, in my opinion. Number one is lifestyle inflation, right? Like, you ever just get like an increase in pay and it's just like, well, I just can now spend more, right? Happens to me all the time. In fact, I bought stuff I don't even need. I got a Nintendo Switch 2 yesterday and I barely play it. you know? Like, what did I need a Nintendo Switch 2 for? It's almost exactly like a Nintendo Switch, meaning all the games from the first Nintendo Switch work in the second one, almost all of them, and then, it's just a slightly bigger screen. Now, obviously, there's gonna be better games for it that come exclusively for Nintendo Switch 2, but I was like, income increased, and I just bought more useless crap because that's the American way. Hear that from George Carlin, right? Bless his soul. Anyways, alright, so, yeah, a lot of people out there struggling, and the more money you make doesn't mean your life actually gets any better, and if you step outside your house, like, I don't know what it is, but it feels like everybody's doing okay. You ever get that feeling, "Oh, like, lots of people at restaurants, supermarkets," like, there's a lot of people buying stuff, and how do they afford, like, four things at the supermarket? Because that's, like, over $100, you know what I mean? Nowadays, it's just like, okay, is it because, like, I'm maybe they're doing much better than I thought, or because they're putting up a front? Hopefully, they're not putting up a front, but a lot of people, okay, a lot of people who make over six figures living paycheck to paycheck, all right? And the biggest one of the biggest reasons is because they got debt, right? Because here's the thing about banks: when they see you have that income and you don't have too much debt, and they want to entice you with debt products because they're like a vampire. It's like a person with a lot of income and no debt is like a human being with lots of blood. And then every single debt that you tackle on is kind of like the vampire draining the blood. And then once you have too much debt, then the vampire sees, aka the bank, that there's no blood to drain, and therefore they won't lend you debt, right? So now the bank has got what George Carlin would say, got you by the balls. Okay. And that's why a lot of people end up struggling with even with their six-figure paycheck. So that's what we're going to do today with velocity banking: pay off our debt. And the first step to velocity banking is creating a budget. So you have your income, expenses, you have your leftover savings, almost $50. Almost. Not quite, but almost. Okay. And if you have two major credit cards, 30 grand and 35 grand, an auto loan, a student loan, and a mortgage, and then you got your general expenses that you got to pay for on top of that, right? How are you going to make it? Now, a lot of people will say, well, you got to make more money. Okay. And yes, it is true. Making more money is fantastic, but we have to redirect the flow of money so that it is. Uh, allows us to easily pay off our debt. And here's the first thing that we got to do, right? So when we do velocity banking, we're not going to save money. You see this savings number here? This is going to freak out a lot of people because it's like, oh my goodness, I have no money in my savings, right? And so if you take a look here, this is my checking account. If money comes in, I just don't save it. I just put it into something. In this case, it would be a line of credit, right? And that's the difference between the average American banking style versus velocity banking. So when you're doing the average American way of banking, you pay your bills and then you leave the rest in the checking or savings account. Whereas velocity banking, you're just dumping all of your money into debt, and you're going to make your line of credit as your main operating account, and you're not focused on the savings number, but you're focused on this cash flow number, right? They look exactly the same in the beginning, but they're not going to be. Okay. So what we're going to do is we're going to assume we have access to something called a line of credit. So what's a line of credit? All it is a financial tool where you could borrow money, pay back, and then use it over and over again. So if you take a look here, this is my home equity line of credit, $373,500, right? And that literally means that I could go to the bank's website, click a button, and then bam, up to 373,500. They'll dump into a checking account, no questions asked, charging me an 8% or 8.5% interest rate. I've had as low as 7.5, right? And I've had introductory rates of like 0.99. That was a crazy time. I wish I could get that again. But $373,500. Okay. That's my credit limit. And so if you take a look at all my lines of credit, right? I got this new $20,000 personal line of credit right here, new $20,000. If you sum them up, this is 731,000. So I actually have $731,000 in credit limits, right? I'm pretty sure soon it'll be a million. Okay, soon it'll be over a million. I'll get like 2 million, all right? So, and this includes credit cards because credit cards are a line of credit, but I got all of them: personal, business, credit cards, lines of credit, line of credit here, line of credit there, line of credit there, right? And then this one is my home equity line of credit. And here's how you get all these lines of credit. Again, as a person who has over $731,000 in lines of credit, I know the secret of what the banks are looking for. And if you just give people what they're looking for, right, you'll get access to their tools, right? And so many people are like, well, how do you avoid what, how do you not give them what they're looking for? It's like you don't, right? It's because what are they looking for? They're looking for people who don't need money. That's the secret to getting credit. Banks don't lend money to people who need it. And then when you understand this basic general principle, okay, like I did, I just like internalize. I just say it a billion times. Like, oh, I go to a bank when I don't need money. That's how I got this $20,000 personal line of credit like 2, 3 weeks ago. I don't even remember when I got it because I don't need the money. And when you don't need the money and you get credit, like, oh, when I get that, right, 2, 3 weeks ago, I don't even know. And so here I have $731,000 in lines of credit. $731,000 in lines of credit. And so, I don't even know what to say because a lot of people like they're so proud of their 10, $20,000 line of credit, which is fantastic, right? But you just keep working the system and you go to a bank when you don't need money, right? And then when the bank sees you don't need money, they'll just lend it to you. This will be a million soon. I know it will. I'm not even trying. I'm not in a rush because I don't need any of this, right? But I don't even know what I'm talking about. Anyways, but how do you get these lines of credit? Is you don't need money. And so here we need money, but the whole point of this is kind of think of this as like car insurance when you drive a car, right? Like if you're in a situation where you got $49 of savings left over and you're trying to get a line of credit, that's like a car crash, financial car crash without car insurance. And so you try to get insurance, then they'll be like, like no, 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 no. We don't offer people insurance to people who crash their cars without car insurance. No, thank you. And then you're trying to apply it. No, thanks. That's how the bank sees you, right? You want to get the money before you ever need it because banks don't lend money to people who need it. Right. And this is why it's important to know the order of operations and the foundation of building credit. You don't get it when you need it. Okay? But let's just assume that we did have a lifeline of we don't even need 175,000. I don't know, let's just do we'll just keep it anyways, but we don't need this whole amount. But we'll say we have a $175,000 8.5% line of credit. Just like again, I have various lines of credit. I had a home equity line of credit for 280. And I was like, do I need this 280? Nope. Got another one for 373,000 or I replaced it. All right. So, let's go ahead and do this and then just move some of the debt into the line of credit starting with the credit card. So, what we use is something called the cash flow index to help us figure out the ranking of what debts to pay off and the high interest rate credit cards are going to be the first ones to go, but the formula is okay, balance divided by payment, and then it gives you a arbitrary number, right? And this is going to be the rank of your debt payoff, and the lower the number, that's when you want to pay off. So you see 20 and 30, 20 and 30. So let's go ahead and pay this off. So this is about 65,000, 65,000. And then guess what happens here? Oh, just by simply moving these credit cards, guess what happens? Bam, bam. So we literally went from $49.46 to $2,236.96 of cash flow. Whoa, how did that happen? So let's go ahead and do this. And then we're going to do this. G2 plus H2 minus 2236.96. So the idea is the final step is you're going to put your entire paycheck into the line, take your expenses out, and then rinse and repeat over and over again. All right. And then what we're going to do is we're going to take the average daily balance, multiply by the interest rate, divide by 12. That's when we get the interest for using the line of credit. And then take a look at that. The debt is going down, and let's see how long it takes us to pay off that credit card debt. 33 months, not bad. So let's go ahead and do that. So we're going to highlight this here, and then we see that in 33 months, that debt is paid off, right? 65K. Okay. And then we're going to go to our loan calculator, figure out in 33 months what the balances are, right? Not 33, my bad. All right, so now, again, use the cash flow index ranking system. What does this mean? Basically, the higher the number, the less bang you get for your buck in terms of cash flow. I mean, think about it like this. Would you pay someone $200,000 for $1,100 of cash flow? Or 47,000 for 700, or 14,000 for 539, right? So let's go ahead and do this. And then I'm gonna just do this right here. We're gonna move the auto loan into the line of credit. And then this is gonna be 0. And now our cash flow is $2,700, right? And then okay. So in 38 months, that car loan is paid off. Okay, so 38 months. And then this is going to be 65 plus 30. That's 95K. All right. And so it's going to do 38 months. And then this is going to be 0. And then this is going to be 38. And then this is going to be 45 grand. So let's move this 45 grand into the line of credit. This is a student loan. And let's see how long it takes us to pay off the student loan. And that's going to be plus 45,300.91. Okay. And then now it's going to be 0 extra $700. Now we're at $3,400. Well, relatively easy. Okay, so let's go ahead and copy and paste this. Yada, yada, yada. Remember Seinfeld? Yada, yada. I yada, yada this. I yada, yada debt payoff. That's what we're doing here. All right. So, 52 months. 52 months. The student loan is paid off. Sweet. And then I'm going to do this right here. So 52 months. So it's 95 plus 60, which is 155K, right? And then 210,000 at 52 months. So this is 0. This is 52, right? 195,000 is currently in our loan. So what we're going to do is, if we have a very high cash flow index and an interest rate difference, we don't want to move the whole thing into line of credit, right? That's kind of a bad deal. But let's go ahead and chunk this thing away and then do this. Okay. And then I think I put did I put the right thing? I don't know. Let me just see right here. And I know I'm going quick. So 6,600 is my personal income. So 6,600, what's my expenses? Everything except for the loan I'm trying to pay off, 2,000. That's good. And then let's just do small chunks, 7,000. Ooh, paid it off in 4 years. That's almost as good as me because I paid my mortgage off actually in 2 years and 9 months. So you take a look here in 2024. It's actually my 1-year anniversary of a mortgage payoff, right? 1-year anniversary. So pretty good. Anyways, so here we go, 4 years. And if we move the whole thing into the line of credit, what happens? See how it goes up 38. We don't want to do that. All right. So now 4 years, 4 years, we paid it off. And then I'm going to do this. So 52 divided by 12 plus 4, that's 8.33 years. And then we are debt free. Okay. All right. So how much debt was that? That's 155 plus 210. So 365K. And actually, let me do this. Let me ask ChatGPT what if this is normal or not. Yeah, because my frame of reference is so skewed because I paid off a mortgage in 2 years and 9 months. I'm like, "Yeah, whatever. Oh, yeah, yeah, 2 years and 9 months. Oh, who cares? Oh, yeah, it's a big no big deal." And then I have to literally ask ChatGPT because I live in my own world, like, "Hey, is this normal or not?" Because sometimes this is what happens to me, not gonna lie. I tell other people I paid off my mortgage in 2 years and 9 months, and then they look at me like they didn't hear me, they don't want to ask questions. It almost makes them feel uncomfortable, you know. So let me just ask chat gpt this. So um I just did a velocity banking YouTube demonstration where with 6,600 a month after tax income, we paid off how much of debt? Um, let's see, 365K, right? 365K, 365K of debt in about what was it? 8.3 years. 8.3 years. Um, it would the average person, how would the average person react to seeing this? Okay.
Cam, that's a powerful demonstration. And depending on your audience, reactions could range from astonished to skeptical to inspired. Here's a breakdown of how different segments of the average viewer might react. Most common reactions. 1. That's incredible. Astonishment, curiosity. Many will be blown away by the idea of paying off 365 KOs in under 9 years on $6,600 or more. They'll want to know how it works, especially if they feel trapped in their own debt cycles. 2. Wait, is this legit? Skepticism. Some will be immediately skeptical, especially of velocity banking, which is often misunderstood or presented poorly online. They'll look for the catch. Are you using a HELOC? What are the risks? What's the math behind it? 3. That could never work for me. Defeatism or self doubt. If someone has lower income, high variable expenses, or poor financial discipline, they might feel like it's unrealistic for them, even if the strategy makes sense. 4. I need to learn more. Engagement, interest. This is your ideal viewer, someone who is interested, open minded, and willing to dig into the details. Contextual reactions depend on debt type. If it's mostly mortgage debt, some may think it's smarter to invest instead. If it's high interest consumer debt, they'll find it more urgent. Use of HELOC credit tools. Using debt to kill debt seems counterintuitive, so people need clarity on how the cash flow loop works. Income versus expenses breakdown. If you didn't share detailed budget numbers, people might assume it's only feasible for those with very low expenses or no kids. Suggestions for future videos. Break it into stages, e.g., Year 1, how we knocked out XXK, HELOC mechanics explained, why cash flow is king. Add real world scenarios. Show how someone earning $4,000 a month might use a similar method with adjusted expectations. Address skepticism directly. A myth busting velocity banking video would build credibility fast. Would you like feedback on your video content or how to tighten the presentation so it connects better with the average viewer?
I'm good for now. But yeah, okay. Well, that's it for today, folks. Korean Atlanta mentorship. Just another boring day where we paid off $365,000 of debt in less than 9 years. So have a great day, everybody. I'll see you all in the next video.